Keki, good morning. Thank you for joining us. While your net interest growth number was a healthy 14%, when I look at your growth over the loan growth of 15 to 23% in last 5 to 6 quarters, net interest income is trailing. Walk us through what is happening there.
All right, so let's first understand NI growth. NI growth comes as a result of the changes in NI happens as a result of change in interest rates. In the first quarter of this year, April, May, June, RBI increased interest rates quite sharply. We in turn increased interest rates to our customers. When RBI increases rates, the change in cost of funds to us is immediate. Our cost of funds go up the same day. But the lending rates get increased over a period of 3 months. The reason is that with all our old customers, individual customers, corporate customers, it changes every month. But for individual customers, we have always given, always had an agreement that the change in interest rates will come at the end of every 3 months. And that 3 months is dependent on the month in which you took a loan. So if you have taken a loan in the month of April, then your rate changes will be effective January, April, July, October. If you've taken a loan in the month of February, your rate changes will be effective in February, May, August, and November. So every 3 months from the day you took a loan. So now when rates go up, the impact, the benefit of the higher rates flows through the profit and loss account over 3 months. So there is a 1.5 month, roughly, average of 1.5 month transmission lag. If you exclude that transmission lag effect, then the growth in the net interest income would have been 16% for this period, which is in line with what the growth in the AUM, total AUM growth is.
Walk us through your construction finance also. Are you consciously trimming this lending as piece of your overall mix? And also the lease financing seems to be growing slightly lower.
So if you look at our book today, construction, let's first finish off lease rental discounting, because that is very straightforward. Lease rental discounting always has been between 6 to 7% of our total loan book. It continues to be at 6%, so it is within the normal parameter. Lease rental discounting doesn't grow every quarter because these are large value leases, large properties. Sometimes in one quarter you will have a large transaction, another quarter you may not have a transaction. There is no there is no continuity in the lease rental discounting product, and I think it's in line with what we've historically had. Construction finance, on the other hand, at one time used to be 14% of our book. Today it has come down from 14% to 9%. So that is really where the decline in the non-individual loan book has happened. Now this has primarily happened because of the fact that the period from 2017 to 2020, I would say the latter part of 2017 up to probably the middle of 2020, was a period of some stress in the real estate sector in cities like Mumbai and Delhi. For a variety of reasons. GST was introduced at that time. GST was applicable to under construction properties. People stopped buying under construction properties. So the last mile funding that developers needed, they could not get. So projects got stalled. Then sentiments got impacted because of that. And because of that, not too many new projects were launched. Post 2020 again, project launches has started with strong momentum because the individual loan demand has also been strong. Now a construction finance loan, unlike a lease rental discounting loan, you do not make the disbursement for the loan upfront. The disbursement is linked to construction. First, the developer has to put in his equity while constructing. Then he has to bring the project up to a certain level. Then based on the progress in construction, we disburse money. So typically disbursements happen 2 or 3 years after the loan was given, say 2 years after the loan was given. So today what we would be disbursing typically would have been loans which were given in 2019 or 2020, which was a time when not too many projects were launched.
Good morning, Mr. Mistry. So that's as far as construction financing goes. Now coming to the individual side, what kind of growth are you seeing over here? And the recent interest rate hikes, is that impacting consumer behavior? If yes, how?
We've not seen any significant change in consumer behavior so far. See, here again, and this is based on our experience, not on this cycle, but the last 20 years that we've seen rates go up and down. Interest rates in India over the last 20 years have been fairly volatile. There have been periods when rates were very high, periods when rates were low, and vice versa. Normally, what we find that when rates go up or down, it has a much bigger impact on short-term loans compared to long-term loans. So you take the example of a person taking a loan to buy an expensive equipment at home. The loan he would get will typically be 12 months or 15 months or maximum 18 months. Now, when you're taking a 12 or a 15-month loan, you want to borrow money at a time when interest rates are low. Because in 15 months, the rate environment is not going to change. If rates are high today, in 15 months, rates are not going to come down. So you want to borrow when rates are low, because then that trend, that low rate trend, will continue for 15 months. And by the end of 15 months, your loan is paid back. But a housing loan is a 15-year loan. Nobody gives fixed rate loans in India. They're all floating rate loans. And in a floating rate loan, when rates go up, your cost goes up. When rates come down, your cost comes down. And over 15 years, you will have 2, 3, 4 cycles where rates will go up and rates will go down. So from an economic standpoint, frankly, it does not make too much difference whether you take a loan at a time when rates are high or rates are low. It's just that sentimentally, sentiments tend to be stronger when rates are low and slightly weaker when rates are higher. Other than that, from an economic standpoint, it makes no difference. And most customers understand that today. The education level amongst people, particularly when they're taking housing loans, is very high.
Right, Keki, great to have you on the show. Thank you so much for taking the time out and highlighting your numbers.